The top, and we have the bottom. All right, delete that. We have the top, and we have the bottom. All right, we're looking at the same pair, same time frame, same time. And I'm gonna move this out the way. So, and this is what I mean when I say you can see how much the strategy's changed, right? You can see on the bottom we have pivot points, and we also have the EMA on there. What up, what up, what up, YouTube? My name is Charles Rice, and this is the Trader's Corner. This is part 2 of the journey of building a Forex trading strategy. So let's get into it. So, like I said before, this is part 2 of the previous video we did, where I introduced you to the fact that at the Trader's Corner we have been developing a new strategy. All right, and so in that video I mentioned that I was going to talk about kind of the beginning or how we first started going about it. And then after that, you're going to see some clips as well, and some subsequent videos, and, the actual process of it. So first I want to just talk about it. As I said before, as I mentioned before in the video, in the part 1, you don't want to just, assume that something works and then just I say just what I call flat out test it. Flat out test it. Like give all your time and energy to it. Like test 3 years of it without looking at there's all these rules and things that I've heard. Not the 3 years thing. That's kind of something weird that I do. But there's different rules and stuff and just ways of back testing where it's it can be very, very involved, but it's very necessary to do it that way, just so you know that you're doing it as close to live market conditions as possible. And these are things that I've heard from people way back, Akil Stokes. So if you remember, I used to talk about Akil Stokes all the time. He's still somebody who I definitely look up to. Somebody I don't, watch a lot of his stuff now. I don't really consume a ton of content. It's really more so me trying to learn by being in the market and doing my own back testing and that type of thing, and reading obviously, but just being in the market and taking my licks. But to get back to it, a lot of the backtesting rules and things that I learned from him that really ensures that the strategy that you're testing, it's as objective as possible, right? Because the last thing that you want to do is spend all this time backtesting a strategy, take it into the live market, it starts to not work, you go back, you retest it, and you realize, wow, I wasn't being objective at all. That was a very subjective backtesting. That's a lot of subjective backtesting data that I have from before. So who knows if this actually really works, which is exactly what happened to me, the first strategy I built. So take it from me. This is why I say, I follow those rules even now to this day when it comes to building a new strategy, just because it's the last thing that you want to do, right? And it's easier for me now because in the past, I used to literally have my rules written out for backtesting, and have them, next to my computer when I was doing them. Now it's a lot easier for me to say, stop, what are you doing? Stop, make sure you do this before, that type of thing. But to get back to it, before you get into very, what I would call involved backtesting, you want to make sure that what you're doing actually even makes sense or even just works, right? So the first thing that we did, we wanted to go through and we had an idea what we wanted our entry signal to be, but it wasn't really working, right? So we had areas that we wanted to enter from. We had the basic, I guess you would say, framework of the strategy that you wanted to build. So you're entering, whether you're entering in trend or against the trend. If you're entering in trend, where are you entering in trend? Where are you entering against the trend? What areas, if we're using indicators, what indicators need to be, in alignment, not in alignment, that type of thing. What does price action need to be doing? What's the nature of it? All those types of things, the actual setup of the strategy, and you have the entry signal, right? So we had an idea of what we wanted the setup of the strategy to be, kind of from our years of using those different courses and those different mentors that we've had, right? So the reason why that part of the strategy development went quicker was only because we've put in so much time before, right? This isn't to brag or say that oh, I work so hard, but it's like I practice this stuff every single day. You know what I'm saying? I've been practicing using Falcon every single day for at least, I think, 2 years or a year and a half. And before that, I was using Urban Forex for at least a year and a half, and I think, no, it was a year. And then I think before that, I'd been just like stumbling blindly by myself for like 6 months or 7 months. So there's time and so because of that, I have an understanding of where I want to enter, where I don't want to enter, and that type of thing. But at the same time, the entry signal might change, right? And that's really where we wanted to test it. We wanted to focus the majority of our testing to make sure that what we were doing actually made sense, right? We understood that, just from, I guess you would say, the quote unquote rules or theories of the market that we've learned from our other mentors, that the areas that we were going to be entering in would make sense, but we wanted to make sure that the entry signal was making sense, right? And just to show you how that changes, I'm going to show you kind of like the way that it's looking right now, right? And this is definitely still subject to change, right? Because as I said before, it's something that we figured out, something that we have to go forward, from this point, but we're still very much open to changing the strategy. We really want it. Our goal is to have it like hard and fast done by the end of the year. We're not even close to that. So I'm going to show you something now that, might honestly change. And the whole point of it is to show you the fact that's the whole point of showing you, is the fact that it might change, right? Because honestly, what I'm showing you is the fact that the strategy has changed. Even just within this 1 month, I'm going to show you how drastically the strategy has changed, right? So I'm just going to share my screen now, and now we're going to look at 2 screens, and just to get an understanding of, how the strategy's changed a little bit. So as we can see here, we have the top and we have the bottom. All right, I'll delete that. We have the top and we have the bottom. All right, we're looking at the same pair, same time frame, same time. And I'm gonna move this out the way. So, and this is what I mean when I say you can see how much the strategy's changed, right? You can see on the bottom we have pivot points, and we also have the EMA on there. I'm not going to explain how to use the EMA or the pivot points. That's not really important right now. And honestly, I wouldn't even do it justice because I'm not an indicators guy. If you want to learn about EMAs and you really, definitely check out people like Austin Silver. Daniel knows about EMAs better than I do. Trying to think of other traders I know out there that use EMAs. Whatever, we'll come back to that. But regardless, as you can see here, we have pivot points. We have the 50 EMA on the bottom, and then but then on the top, all we have is just simply, it looks like Falcon, right? Like it just looks like, as you can see, really just have this channel, right? And really just playing this channel up to the top, right? And if we kind of scroll this out, something we might do on this one is we might throw a line here. See that? Oh, we're struggling around this area, or maybe we put it here because we're on the 1 hour. Yeah, probably there because we're on the 1 hour. All right, you can see that we're up around this area again. So again, we're looking at the same area, but you might be looking at it in different ways or looking for different entry signals depending on what you have on your chart, right? And the entry signal that we had based on when we were trying to use pivot points and the EMA together, much different than what it is now that it looks like this, right? And again, this is definitely still subject to change, right? Like I want full disclosure, D Hart's been kind of busy recently this past week, so I have made a few changes and tested a few things that I want him to come in and see if he wants to put his own spin on it. So again, we might end up throwing some indicators on this, who knows? But that's the whole point of the whole strategy development process, is remaining open to change, right? And it's not until you have something where you say, yep, this is going to work, and I've tested it out and I know it works, that's when you start sticking to your rules, right? Because again, obviously, you want to say that you want to stick to your rules as a trader. Obviously, you want to be as mechanical as possible because you can't predict the market. You can't know what's going to happen next. So your rules are there to protect you. But when you're developing that strategy, something that you might think is going to work honestly might not work, right? So, for example, there was an entry signal that I thought would just be great, and it just didn't work with this strategy whatsoever. And I had to completely scrap it. So, just very quickly, I just want to end off with a quick tip on. I just want to end off with a quick tip on how to get through this first period of testing. And that is really to make it as simple as possible. What do I mean by that? You want to collect the data, right? Because you don't want to just say, because first and foremost, they're going to be, if you backtest something, I'm a personal believer that you should backtest on at least 3 pairs. I think because of, like I said before, I've backtested something multiple times and it worked, not something multiple times. Multiple times I've backtested something and it worked on one pair and then completely just didn't work on the other pairs that I tested it on for whatever reason. Can't explain it to you. Obviously pairs are their own animal. They're going to be different and have their own nature to them. But for whatever reason, it just didn't work on any other pair, right? So that's why I have this rule that I think you should always backtest on at least 3 pairs. Didn't hear that from anybody else. This is something that I just came up with myself. Take that with a grain of salt. So that's first things first. So to get through that point, what I would recommend is making it as simple as possible, right? So obviously you're going to want to collect data. You're not going to want to just say, oh, I'm pretty sure I got 50% on euro, or I'm pretty sure I got 48% on USD JPY. You're going to want to collect the data and be able to go back and check yourself, right? But you want to make it as easy as possible just because you want to get through this part, right? The reason why I say you want to get through this part is because you're going to do something and then change it and then have to start testing something again. And so then get through it and then change it and then have to start testing something again. I promise you. Like, especially if you're doing it like by yourself, you know what I'm saying? Or like kind of on your own, you're going to have to do this kind of multiple times, this part kind of multiple times. And so it's easier if you just make it easier on yourself. And so something I did was I had made just some simple folders, right? And I just named the folders the type of setup that I was looking for, like to a T, right? And so I'm not going to say, the type of setup that I'm looking for, but let's say it's I'm going to Kaiser Soze it right now. It's the Logitech C29, direct TV remote strategy. You write that completely out and you write out wins, you write out losses. If you have break evens in it, you do that too. And then you just say, okay. And I would recommend, you don't have to do this because you might be testing a strategy with the idea of wanting to leave, let the trade run and not have hard and fast stops. But again, just for the sake of like getting through the testing and understanding that you have something that works, I would say go with hard and fast stops, like maybe like 2% or 1%, whatever makes sense to you. And just say wins, losses, and then the other thing, or if you have break evens, and just very quickly go through it, right? And the other thing, the last tip I would say is just, again, as I mentioned before, be prepared to do something, it work on one pair, and then it not work on another, or do something and then it not work in any way, shape, or form like you thought, right? So you want this strategy, like you're not going to spend all this time developing a strategy that's not going to fit your psychology, right? So let's say you're somebody who wants to win a lot in the market, that's fine. You just need to find a strategy that wins a lot. Now, with the strategy that wins a lot, you're going to have a trade-off that you're probably not going to have big winners, but you'll win a lot, and that's what you want to do. So if you're developing a strategy and you find that the entry signal you're testing doesn't win a lot, but it provides you a lot of big winners, now you know that that strategy is probably not for you to go forward with and not for you to waste any more time with. So that's why this part, I feel like you should, be okay with doing a lot of different things and prepare yourself to do a lot of different things in different ways. So make it easier on yourself as possible. So hope you enjoyed this video. Hope it provides some value to you. Please join us again next time. Thank you.